Well, hi, everyone. Welcome to the Buffett and Beyond Saturday Market Recap Letter, and this is July 8th, 2023. Welcome to the second half of the year, folks. And remember, if you want to live on this beach like Jimmy Buffett, you've got to learn how to invest even better than Warren Buffett. And this week, the market technicals turned down, but the new job created slowed down, which takes the pressure off the Fed. So one maybe is balancing out the other, and this market just does not want to give in to the doomsayers. Now, our weekly stock analysis video, well, we have new numbers on Google, and it's still beating the overall market by a tidy little sum. And we have new forecast numbers, which tell us not even to think about selling any of your positions in this stock, which I've been asked a lot about this past week. Now, our ETF, well, we have the financial ETF, which is lagging the overall market. However, the top 6 stocks in this ETF have doubled the S&P over the past 5 years and have tripled the finance ETF itself over the past 5 years. And it just goes to show that you want to fill your portfolio with better than average stocks so you can outperform the market, which 96% of professional money managers cannot do. All right, let's look at the market this week. And wow, here we were at the top. We made a double top, and this market started going down, and it stopped at the 20-day moving average once again. And right now I'm recording this Friday afternoon before the market closes, and this market just does not want to quit. And when we come down here to this intermediate term indicator, even though it seems to be sloping down, and over here this is actually a sell signal, but then it came back up and it's running parallel right in here, which means it's not telling us anything. And we certainly wish it would tell us which way it wants to go. Now, when we go to the RSP, now remember, the black line here is the S&P 500, and it's capitalization weighted. That means you take the number of stocks outstanding times the price, gives you a number, and you do that for all 500 stocks. Now, this other line down here, the yellow line, or mustard-colored line, is the entire S&P 500, but each stock counts as much as another stock. So in the top area, or the top line, the top black line that is, we are looking at 7 or 8 stocks that are carrying this market. But then this line down here, the yellow line down here, represents the entire market equally weighted. And we can see that back in here, we thought this market was going to fall apart because a few stocks, and we know them, it's Microsoft, it's Google, it's Meta. These stocks are leading the market, and the rest of the market was just kind of falling apart here. Then all of a sudden, this RSP, so it's the market equally weighted index, started catching up, and now it's running hand in hand with the market. And with this little decline that we had at the beginning of the week, it came down with the market that we always hear about on TV, and then it started going back up again. This is Friday, and the market has yet to close. So it looks like all the stocks are participating, and we don't have the imbalances that we usually see when the market starts getting weak, like back in here. Now, let's look at the QQQs, and here is something that is the same on all the indices, except this one seems to be a little weaker, and lo and behold, it's not so weak. It's not weak. It's right back to this previous high in here. Now, what bothered us was that with this indicator up here, this gave a downward slope. So in other words, when it reached this high, it was not as high as this high, but yet the market reached a high, and now it's back at that high, but the indicator is not as strong. So that gives us reason to pause. 20-day moving average, this green line, and this blue line is a 50-day moving average. And you can see this index, the QQQs, which is the NASDAQ 100 minus the financial stocks, is right back at its top again, but it looks weaker, and that's what's giving us room to pause in here. And for portfolios, what we did, we sold some covered calls, not close in, but 2 weeks away and at a higher price, and we sold them on about half the stocks, or half a position. So if we had 400 shares of Google, we sold calls on 200 of them. Actually, we did it on Tesla and Nvidia this time, which we got nice premiums on those two stocks. But we'll see how that works out. Meanwhile, down here, back in the farm, yeah, this indicator, this is a sell signal in here. And yet this QQQ index does not want to break. So we're getting oversold. Well, we're not oversold. This is still overbought territory, but you can see that it's going down, and yet the market does not want to break. So we just have to be very careful in here. Selling calls is a pretty good idea if you have enough shares in which you could sell the cover calls. And some folks even asked us about bear market call spreads, or call credit spreads, which is a bearish position, but you do it above the market and you don't risk very much money doing that. And that's a little bit more of a complicated strategy, but for those of you who are, a lot of subscribers are using that situation right now. We're using that strategy right now. So anyway, we just have to be careful in here because these indicators are getting weak. Some weaknesses, money's coming out of the market rather than going in. But don't forget, there's a lot of money sitting on the sidelines right now. And when they feel that this market has been oversold just a tad, that money's going to come roaring back in. And don't forget, the jobs numbers came out weaker than expected, taking the pressure off the Fed. So we have a lot going for us, actually, except that the market is overbought. And that's why we're starting to see weakness and some of the money's coming out, and it may be sorry that it did. So the long-term holders in this market are doing very well. And how have the portfolio results been since December of 2002, folks? That's 21 years ago. Well, our portfolio returns about 16% per year, and this is a portfolio of 30 stocks. And at least half of them you've heard the names of. They're large cap stocks. Meanwhile, the S&P 500 has been returning a little bit under 10% per year. When you compound that out for 21 years, our portfolio was up over 1,000%, with the S&P up 377%. And remember, our growth model is a buy and hold with changes of any taking place the last trading day of the year. Most of the stocks are in the S&P 500 index. And for those of you who want to see the stocks that we write about in our ETF video, or you want to use our computer program for a little while, 2-week free subscription. Just need your name and your email. So, and this is all based on the book Buffett and Beyond Second Edition. Folks, it's at www.buffettandbeyond.com, all one word. Buffett is spelled with 2 F's, 2 T's, buffettandbeyond.com. It says 2-week free subscription. Go for it. We'll get you on our mailing list, and you will have access to all the archives, all the computer programs, and you'll just love it, folks. You can't be free. Okay. And those of you who want portfolio protection, this is a $135,000 portfolio. We have 3 SPY puts, which will protect it about 7 or 8, right now about 7 or 8% below the present level of the market. So you can sleep at night. A lot of you want these on all the time. And when I talk about selling cover calls or doing a spread position or something like that, it's just to get enough money to pay for these puts so you don't have to pay for this insurance. Wish we could do that with our houses and our cars, right? So folks, remember, if you want to live on this beach like Jimmy Buffett, you've got to learn how to invest even better than Warren Buffett. So we had a topsy-turvy week this past week, and it was a short week. It was only 3 days long. Well, Monday, the market was open for a couple of hours. But going into this coming week, it'll be a full week, and we'll see what's happening. And we just might be in the summer doldrums where everybody goes on vacation. Nobody wants to do anything, which is just fine with all of us. So, folks, be safe. Have a good time. Be with your friends. Take it easy. And we'll see you back here next week.